of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning, folks. Here's the latest in the U.S. markets. We've got new highs yet again. The S&P 500 squeezed out a gain of 0.2% to close at 6,047. And we've got the Nasdaq Composite adding 1%, closing at 19,404. The Dow Jones Industrial Average, on the other hand, lost 0.3%, 129 points down to 44,782. So let's check in now with Michelle Schneider. She is the Chief Strategist for MarketGauge Group. Michelle, thanks for joining us on the show again.
Good morning, Ryan.
Good morning, Michelle. How are you doing?
I'm doing great. I mean, who could be unhappy with the markets going to new all-time highs?
Yeah, it is the time of the year when markets get that sense of euphoria heading into the festive season, and it does look like it might play out again as usual with that potential Santa Claus rally.
Well, yes, and what's interesting, though, is, as you know, since we've talked so much throughout the year, which I'm very grateful for, by the way, is that I still really focus on some of what we call the inside sectors of the market. In that I would be looking at the small caps, the transportation sector, and the retail sector. Now, the good news is that the RSP, which is the S&P 500 equal weight, has been outperforming. So we're already seeing a healthy broadening of the market with sector rotation, but we still need to see the Russell 2000 stay in the game, the consumer and the retail sector stay in the game, along with the transportation, in order for us to continue to be optimistic, especially as we get into 2025.
Yeah, we have also been enjoying, or at least seeing the markets get a boost of sorts following the elections. Has it been pretty much the same since it's been the story, at least from 2016, when we had that Trump promise of tax cuts and more policy that might be friendly for markets? Has that been playing out the same this time around?
Well, I think there are some things that are very similar and things that are not so similar. So in 2016, initially, after the election, things did not go as well. But then as we got into 2017, the market took off and never looked back, really. And also we had a very different situation with the interest rates at the time. The interest rates were still very low, whereas now we still have much higher interest rates. So I think that what we have to look at as we're going into 2025 is going to be really focusing on the interest rate narrative and what happens. Are the interest rates going to come down as a boost to the market in 2025, or will the interest rates drop as more of a flight to safety as people start to get concerned about how effective some policies are going to be, or even if the market is too rich? So we don't really know all of that yet. But we do know at this point things looking very optimistic.
Yeah, how much will this Friday's non-farm payrolls play into the next rate decision?
Well, I think it's pretty much a foregone conclusion, or at least the majority believe that the Fed is going to cut another 0.25% and then not cut at their next meeting into 2025. And that would make sense. I think there's a good chance that they don't do anything now, but I doubt that, because I think that they want to really basically, and of course we have a jobs report this week, so that might be somewhat influential to see if the jobs market stays relatively firm, but not necessarily getting too hot. That would probably be more likely that they lower. But it's going to be really interesting because, like I said, there's so much chatter about next year with tariffs and the dollar and in the recent statement against BRICS and really basically weaponizing the dollar, that people in other countries, because other BRICS countries have to use the dollar, they're going to get 100% tariffs. And also on top of that, there are things that Trump will not be able to control at all, which is going to be what happens with the price of certain commodities. So as far as the interest rates right now, I don't think the Fed has too much to worry about, so they probably will lower. But again, everything could look different in 2025.
Yeah, talking about 2025, this is when Donald Trump will take his take up the White House, where policies might play out in terms of tax cuts as well as tariffs. And not too long ago, over the weekend, he threatened 100% tariffs against the BRIC nations. So there is this chance of higher prices, inflation, and what you're eyeing is the chance of stagflation as well.
Yes, well, we've kind of been it's like been a bizarre combination of soft landing and stagflation already this year, because we saw inflation come down tremendously as the year started, but really basically it sort of has now stopped going down really basically since about June, and we're starting to see even some areas of inflation get elevated again. We just had the PCE was slightly up. The CPI has been naggingly over 3%. These are not the Fed's targets. They're lower. So the question is, what would happen to goose inflation? Obviously, some of it could be completely beyond anybody's control, which would be possibly a geopolitical situation and escalation as opposed to peace agreements around with Ukraine, Russia, Middle East. Another would, of course, just be good old Mother Nature. I mean, she always has our way with us in the end. And then, of course, it could be a slip-up of policy, and that's why we're back to looking at those interest rates, because we know that the Trump policy is for lower interest rates, but if they go too much lower in this high period of growth, the reverse could happen, and they could turn out to be more inflationary without the real growth because of the tariffs, and that was really where your stagflation would come from.
All right, let's take a look at what are some of the places you're interested in, I suppose, investing in the coming year. And would it be fair to say you're overweight on weight loss drugs?
Yes, very good. I was going to say I am very, very focused on it. And the main reason is because I think there's a regardless there. Regardless of what happens in 2025, we're seeing a trend. And there were some recent statistics that came out based on this trend. So we're calling it the thin consumer, if you will. So, like, for example, not just the drug companies themselves like Eli Lilly and Novo Nordisk, but right now what we're starting to see is a domino effect. So just in terms of what people are shopping for, there's been an increase, a 12% increase in the smaller sizes that people are buying, and an 11% decrease in those really larger sizes, which I'm not sure what it's like in Singapore, but as you know, we have a 30% obesity rate here in this country. So that's shifting. And it's already doubled in the last 11 years how many people are taking the diet drugs. Diabetes has dropped. And the prescriptions among young people are up almost 600% since 2020. So you have to say, what's going to happen? They're going to stop eating fast food. They're going to start buying more goods for their, for facial stuff, hair, better clothes, athletic wear. So just think about maybe 10% of the population all of a sudden feeling thin and staying thin, and what they're going to do and not do. And that's why I'm so keen on that area.
Yeah, that's a very interesting point. The sizes people are buying, smaller sizes going up, the larger sizes going down. All right, let's take a look at what you're also looking more closely these days, the solar space and EVs. And that's interesting to look at because we've been hearing a lot from Donald Trump just talking about drilling and more drilling. How is that playing out for solar and EVs?
Well, again, and I try to walk a fine line of objectivity, but there does seem to be somewhat of a contradiction between not wanting to deal with EVs and just drilling and making cars more affordable using oil and gas, and yet having Elon Musk as his right hand, so to speak, who is all about EVs. And clean energy. So we don't know yet how that's all going to work out. Is this just some sort of a campaign slogan, drill baby drill, because it excites a good part of this country that really still relies on oil revenue, including the state that I live in? My guess is that we'll need everything. We'll need solar. We'll need wind. We'll need, there's a lot more talk about nuclear energy with uranium. I think that's further down the road. We'll need natural gas. So this big disparity we've had in the prices of solar versus the price of other types of energy, particularly natural gas now and oil, I think will start to come in. And I think that could be not only good for solar energy, But other EVs outside of Tesla, especially those that aren't tariff subjected, like a Rivian, for example, could actually do well.
All right, solar as well as EVs could still make a comeback. And we've been in conversation with Michelle Schneider. She's the Chief Strategist for marketgauge Group. Michelle, thank you so much for your time. Always a pleasure chatting with you.
And I guess if I don't speak to you again this month, have a wonderful Happy New Year.
Yes. Happy holidays, Michelle. Great to have you on this year and looking forward to having you back on again in 2025. Thanks again, Michelle.
Me too.